The Charlotte Ledger Podcast is a member of the Queen City Podcast Network.
This podcast episode is brought to you by Coca-Cola Consolidated, Charlotte's local bottler and the largest Coca-Cola bottler in the U.S. Did you know that their bottles and cans are made to be remade? Coca-Cola Consolidated aims to lead the beverage industry with innovative ways to recover what they produce through our Refresh, Recycle, Renew program. Learn more at cokeconsolidated.com/sustainability. Welcome to the Charlotte Ledger Podcast. I'm Steve Dunn. To find out more about the Charlotte Ledger, visit thecharlotteledger.com. I'm joined today by Sallie Jarosz, a former real estate executive, recently retired. Welcome, Sallie.
Thank you. Glad to be here.
So you worked in business and real estate for a long time and then retired at the end of 2024. How's that going?
Well, I was elated at the time. Think about, 40 plus years of working nonstop. And it was just a joyous moment of getting out of banking, to be honest with you. But I suddenly found myself getting extremely bored. There's only so many books and shows you can watch, and we would go to the beach, but I needed a purpose, to be honest with you.
So you had some period of time where you just tried to relax and enjoy life?
I did. I work out. My husband's my trainer, so I was doing that. I'm on 2 boards. I'm on the Girl Scouts Hornet Nest Council board. I'm also on Career Master board. And that's only a once a month type of a deal. So you got to fill the gap. I'm very involved in my church, but that's once a week. So it's like, okay, what do I do now? I actually thought about creating a commercial real estate finance course and teaching that to students, either through, continuing ed for the brokers. But that turned out to be somewhat of a challenge because I had to get certified and I was just really not quite in the mood for that. So I'd say back in May of this year, someone that I know very dearly reached out to me and said, hey, I know you're looking for something part-time. Because really I wanted to maintain my flexibility to be able to go to the beach, still have my time at home, with my husband, my family, my grandchildren. And she said, they're looking for someone part-time.
Well, it's May. You retire at the end of the year in 2024, and by May, you're fielding calls from people who are asking if you want to get active. I'm wondering, it's interesting to me to catch you here at this moment where you're less than a year into retirement, and I'm wondering if you were surprised by your need to find something to fill the space. Like, did you imagine yourself riding off into the sunset and just relaxing and enjoying life? Or did you know when you left your career that you're going to have to find something else to get active with?
I was so eager to be candid about getting out of banking that I hadn't really thought about the repercussions of going from full speed ahead to nothing. And when at first it was really fun. It really was relaxing. But then knowing me the way I am, the way I've been going full tilt my whole life, it's not a shock that I would need something to fill that void. And
it's not a shock in retrospect, right?
But no, not at all.
But I don't know if everybody really knows themselves, right? And I speak from experience here, having gone through a career transition myself. I was a lawyer for a long time. I'm working as a mediator now. When I left my law firm, I was very happy to get out of it at the time. It sounds like you had a similar experience with respect to banking. But I thought, knowing myself the way that I thought I knew myself, that I would just relax, at least for a while, at least for a couple of weeks. I'd do nothing and decompress a little bit, but I just didn't. I just kept going. I immediately started trying to drum up the new thing. And so I wonder, as you look back on your own experience, what you've learned about yourself, if you've been surprised about yourself in any aspect of this.
Well, it's really more of an affirmation about what I know about myself. My clients, because basically I was selling financing. That's what I was doing. And oddly, I was calling on some of the same people that I was calling on when I was 23. Because the development community in Charlotte hasn't really changed much. Some of us are starting to retire, yes. But a lot of these folks are my friends. So that was my social circle. So all of a sudden, your social circle diminishes. And I thought, oh, And I still belong to Crew Charlotte, which is Commercial Real Estate Women, the Charlotte chapter. So that keeps me engaged with all the gals and guys in the industry. But we meet once a month. I'm on one of their committees, actually 2 committees. So that keeps me a little bit busy and more social. But I really needed a connection with people. It's my husband trains young kids, so he's got his little outlet. I needed mine. But I didn't want anything full-time. I didn't want anything that was going to take me away from him, because he's 8 years older than I am. So we've got time, a little bit of time here, but I didn't want to jump right back into something that was going to remove me from him, but needed that socialization as well.
All these developers you worked with for decades.
Oh my gosh.
Did you wonder how they were going to carry on without you? Or have you been?
No, if you know the developers,
oh, okay.
they can survive just fine.
You had no concern about that, right?
No, not at all. Not at all. I really value the relationships I did have, and I still have very good relationships with them from the Fields of Hope standpoint, because I've reached out to that community to help us grow our organization.
Of course. Well, that brings us back to Fields of Hope. And this is the call that you got in May, right?
Yes.
So a friend calls you and says, hey, I know you're probably looking for something to do. What?
So the accounting manager for Fields of Hope is the daughter of one of my best friends, who is also a developer.
And Fields of Hope is a nonprofit that's dedicated to the education and support of survivors of sex trafficking.
That's correct. And we have a house here. We have 5 survivors at the house. And getting back to how I got involved, the accounting manager reached out to me and she said, I know you've been looking. I know you haven't been able to hit on anything that just is the right fit, but would you consider meeting with Melissa Hall, who's the executive director of Fields of Hope, and just talk to her? They could use your strategy, your vision, but they also need your writing talent, your marketing skills, your finance skills, all those things. And I said, sure, I'm happy to meet with anybody. And Melissa and I just hit it right off. And she was challenged with trying to create a sustainable organization, because Fields of Hope has been around for 18 years, but it's been, like a lot of not-for-profits, they're struggling. When federal funds are getting cut, grant money's going away, or it's competitive, it's hard to get. So we talked, and I said, this is something I've been passionate about for a very long time. When I was president of Crew Charlotte, we had Mira Sorvino come and speak at our signature luncheon, and she is an advocate for survivors of sex trafficking. And that moment, she brought a survivor on stage, and I'll never forget, I had to go on stage after her. And it was probably one of the hardest things I've ever done in my life, to speak after that, because it was just so bone-chilling to hear these stories. And, I thought if I could ever get an opportunity to get involved in something like this, I would jump for it. I would just jump right into it, and I have.
Well, how does Fields of Hope do it? You have a residential facility, right?
Mm-hmm.
You host women there on a subsidized or free basis, I would assume.
Well, we promote, we get supporters. We have donations. The church community has been excellent. We get state grants, so it's fully funded for them. They are required to work for Youth for Hope, where they make candles, jewelry, things that they can sell. It just gives them survival skills, things that they can learn. And we also educate them. We provide trauma-informed care. So we have therapists that are doing in-kind donations. But it's a 2-year program, and they're 18 to 21. And then what we do is try to find them, educate them enough, and even provide scholarships so that they can get educated, whether it's through a trade or actual college, so that they can survive on their own.
It's a part-time job in name.
It's not.
Is it really part-time?
No, as a matter of fact, my husband and my son have been teasing me about, oh, there she goes again. Supposedly 15 hours turned into 40.
Yep.
So.
Well, that's the way it goes. I've been involved in a bunch of nonprofit boards too, and what I always tell people is that the organization will accept from you whatever you're willing to give. And if you're willing to give more, then they'll accept more.
Well,
and that's fine.
Yeah. And, candidly, I was raised by educators, and you give back. I mean, that's part of being an educator. You're not doing it for the money. You're not doing it for the status. You're doing it as a part of your, moral compass. You're there to give back, to give. And I keep explaining to my husband, that's what it's all about. It's giving something that I'm really good at back.
How do you feel about the balance that you've struck? Have you settled into it yet? I mean, retirement is a process, right? You're not going to crack the code overnight. Yeah. And it's, you've already learned that you're not cut out for just sitting on the beach and reading novels all the time, right? You've got to have something going on, at least for now.
Right.
You've got that now. And how do you feel about the balance that you've struck, and how's it going? I've always heard that people enjoy retirement, that people speak highly of retirement. And I wonder what it's like for you.
It's been, well, the first 2 months was like drinking from a fire hose, because I was being tasked with things that was not my skill set. But I've kind of gotten into a groove now, and I've struck a balance where I work to the work. Like if I'm needing to do emails at 7:00 at night, I'll do it. And traveling, I'm able to work in the car. I'm able to work at the beach. I'm able to do all those things. So I just work to the work. So if it's really busy that day, that's what I'm doing. But I don't let it interfere with my family, if that makes sense.
Sure. So you're right back in it, an executive once again. This is following, did you say 40 years?
40 plus years.
40 plus years in business, primarily real estate and real estate financing, and a lot of that in Charlotte. UNC, University of North Carolina at Charlotte, which I was about to call UNCC, but I believe that
they don't do that anymore.
We are now calling it Charlotte.
Charlotte.
Yeah, I've been around long enough, so I'm still working on that transition. But you went there. And both Charlotte the city and Charlotte the university have been in a mode of growth for as long as I can remember. And you've been around and witnessed a lot of that. And I wonder what you think about Charlotte and how it's grown and your own involvement in that.
Well, it's changed so much. You just look at South End, for example. I mean, that used to be a highly industrialized area. And now look at it. I drive down South Boulevard and I'm just in awe. Because getting, permits and zoning changes and things like that is somewhat difficult. Charlotte's been in a pro-growth mode, though, for the longest time, which is why you see what you see. And demographically, when you look at Charlotte, we've changed radically over the last 20 years, 30 years, even the last 10 years. Demographically, we've changed ethnicities. I mean, you look at the Indian population, Hispanic population, all of that has grown and changed the scope of the city. And then you've got all these newcomers coming in. The homelessness. I mean, Charlotte has an affordable housing crisis as well, on top of everything else. So we've got that to deal with. We've got people on the streets. It's not as bad as LA, but I mean, it's still there. It's a problem. But those are growing pains of any major city. We have one of the largest airports in the nation. That's just a reflection of the second largest financial center in the United States, which is what we are. And think about all the changes that I've seen 30, 40 years ago. No one would ever have considered living uptown. Now look at it.
This podcast episode is brought to you by Coca-Cola Consolidated, Charlotte's local bottler and the largest Coca-Cola bottler in the U.S. From package recycling, emissions reduction, and water leadership, Coca-Cola Consolidated is championing industry-leading sustainability solutions and best practices that put the planet first. Headquartered in Charlotte, the company has worked with a number of local organizations and large venues to support circular economies by increasing the collection and reuse of packaging, as well as educating communities about water conservation. Learn more at coceconsolidated.com/sustainability. It is incredible. And let's walk through a project, right? A day in your life and during your long career in this world. Let's say that I'm a developer and I want to level a bunch of charming historical buildings in Plaza Midwood and put up a 6-story soulless apartment building. All right. So I imagine I'm going to take into account a lot of things with respect to the feasibility of a project like that. Just things like the location and my own expertise, my own ability to carry it off, my understanding of the construction process and stuff, what my intentions are, whether I'm going to hang on to it and rent it out myself or try to package it up to sell it to somebody at some point. But financing is going to be a part of that, right?
Right.
And so what am I going to do? Am I going to a bunch of different banks and talking to a bunch of people like you and kind of like playing you off each other and trying to get the best deal? Or what are the considerations on my mind that someone like you can step in and help me with?
So a lot of this is based on the size of the development company. If they're like a Harris or, like a Keith Corporation or Grubb Properties, they usually have a dedicated person that handles all financing. And I create those relationships. I work with those people. I also deal with the CFOs of these development companies. So like Primax Properties, I dealt with the CFO there. She would come to me and say, and they do a lot of legwork. You talk about feasibility. They're working with the city. They're working with, because they do a lot of development all over the United States. So they're working with local governing councils, if you will, on zoning, permitting, whatnot. And so by the time I get it, she's already established a cost breakdown. She's already established a market rate. And a lot of these development companies are pretty savvy when it comes to understanding market analysis, market feasibility. So I rely on them and their packaging because they do a really good job of promoting, here's the pro forma, here's the cost analysis, here's what we project, here's the lease. They have to negotiate a lease. Multifamily financing is a little bit different because that's really truly based on market analysis and studies and comp analysis. So you have to get a real good handle on what these other apartments in the areas are renting for. You can't go way above the market. You can't go way below the market. You got to be somewhere right on.
Well, it sounds like the developer's sort of making a pitch to you regarding the feasibility of the thing and to give you a comfort level regarding the risk of the loan. Is that basically what we're talking about?
So when developers come to me, if I'm a bank, they're trying to get direct financing. So they have a need. They need construction financing if they're going to build something. So they come to me. They can also go to a mortgage banker, but they would pay a fee for that. For me, I would look at it and I would I would basically do a re-underwriting. You use CoStar, you use all these tools that we have at our fingertips to make sure that this is something we would be interested in. Of course, it's not up to me to do that. It's up to your credit team to decide whether or not we could proceed on something like that. And then basically I price it, quote it, and then these developers are savvy enough, they've got a whole stable of bankers at their fingertips that they can go to and say, this is what I want, this is what I need. And depending on the market, it could be a developer's market or it could be a banker's market, depending on where interest rates are and who's actually lending. We went through a weird period back in 2023 where lenders were really skittish about lending on multifamily and hotels were out of the question. So that was a good time for me because I was one of the few lending. But it's really a competitive market. Just because the developer comes to me and says, this is what I want, doesn't mean I'm going to win the deal.
What goes into it then? Or how do you see what you're trying to do? Are you trying to sell this thing to the developer, or are you trying to make sure that the bank doesn't experience a loss, or a little bit of both, all of the above?
It's both. It's making sure that you're providing a solid solution for the developer.
Yeah, you want the deal.
But you're not going to put it's risk management.
Right.
You cannot put the bank in a situation where that deal may go bad. With the economy, you've got to look at every factor. You have to look at vacancies, trends, whether the market's stable, how much is coming online. I looked at a deal right off where Selwyn Pub is. And I looked at that deal, and what scared me about that transaction was there was a lot of multifamily going up all at once. So you have to really carefully and analyze absorption. Like, how quickly is this thing going to absorb and rent and lease up?
Okay, so you're looking at it and you got the heebie-jeebies about a couple aspects of the thing, but that doesn't mean we're not making the deal necessarily. It just means that we're going to have to turn a couple of the dials a certain way, right? Oh, it's going to cost you a little bit more. We're going to have to adjust the terms in a way that reduces the bank's risk.
Yeah, you're looking at exposure risk. So you might still do the deal, but you might lower the loan amount. You may consider other factors, risk mitigants, maybe getting additional collateral. There are ways to do these things. It's just, it varies deal by deal, which is why I love the business so much, because every deal is different. Every deal has a different challenge to it, or not. I mean, you can be doing very, basic deals out there that are like single tenants. Those are easy. You can underwrite them with your eyes closed. But
single tenants meaning what? Like
Advance Autos, freestanding retail.
Corporate chain, well capitalized.
Yep.
Paint by numbers.
Chick-fil-A.
They kind of know what they're doing.
Exactly.
Yeah. Yeah. Established in the market, predictable.
They're national brands.
Outcomes, right.
They're usually credit rated, which makes them really easy to do with the bank because, you get a credit rated tenant in there, Moody's, S&P rated, and then the bank's like, okay, I can handle that.
What are some of your favorite deals that you worked on or things that you see sort of every day when you're driving around that you take pride in all the time to this very day?
I was part of the first renovation of SouthPark Mall, and that was a lot of fun. And that's back in the day when they had Morrison Cafeteria in there. So that was a lot of fun. And I financed, buildings in here, a lot of shopping centers, the University Plaza up by the university. And I drive around and I'm thinking, gosh, how old is that building? Because I was part of the groundbreaking for the plaza up at the university with Jim Merrifield with MPV Properties. And that was 1988. I think my hair was this big. So, yeah, I drive around and my husband knows. I mean, I even financed it used to be called the Spalding and Sly building, and it's right there on Billy Graham and 49. And that was, oh my gosh, that was probably 1984. So the real estate in Charlotte is pretty old.
What's it like being a woman in that business? I imagine a lot of the developers are men, and not just men, but also sort of risk-taking, kind of high-flying, big dollar, big egos, I would imagine, like larger than life in certain respects. And you've been recognized by a number of organizations. Of course, the Charlotte Ledger 40 over 40 being one of the most recent, if not the most illustrious, but also various women in business organizations. What's it been like for you? You were in it a long time ago. I imagine that aspect of things has changed, but you were there when things were different.
Well, I started my career in 83. And at that point, really, there were not many women in the business at all. If you were a woman, chances are you were maybe an appraiser or maybe you were a leasing agent. But I was fortunate in that my first boss, he was my mentor, he gave me every opportunity to grow and to learn and to expose me to all these developers that you're speaking about. And some of them are indeed, ego-driven, powerful, and some are just the sweetest men on earth who actually cared a lot about me. So I got lucky. I'm not going to say it was easy, but I was very fortunate to be surrounded by men who were like father figures. They were older, they were gentlemen, and I probably had a more challenging time. When I started my career, I was a mortgage banker, commercial. So you're dealing with life companies as your lending capacity, and you act as a go-between between the developer and the lender. And I probably had a tougher time with the life companies, the men there, because they just were ego-driven as well. And I'm just thankful that we have so many talented women in the industry. I mean, young women who are just kicking it, just really kicking it. And I've been fortunate to grow in this industry and see all the changes and to be a mentor to these young women. I've mentored hundreds of women over my lifetime. And I'm just thrilled to see them in this industry,
What's the outlook now? I've been in Charlotte a while as well, and I've been through periods of time where you could sort of lose track of how many cranes there are uptown, but this is not that time. Times are a little bit different now. Development has moved out a little bit from the center city. We're sort of expanding a little bit. There's a lot of uncertainty in the world now. It's I imagine the interest rates loom large over sort of everything, right? Like just sort of liquidity in general kind of dictates activity a lot of times, I think, very generally speaking. I wonder what you're thinking about how things are now, or if you're just kind of thinking like, not my problem anymore. Like let's let the rest of the world worry about that.
Oh, I think about it a lot. Obviously, during the Biden administration, interest rates crept up under Jerome Powell, and that probably was necessary at some point. The Fed fund rate was I think, near zero with Trump, and
and for a long time before that, decades really.
It needed to happen. However, I think it went too far. It's affected a lot of people trying to buy homes,
right? And
so I do think about it. I do care about it because my mortgage is tied to prime. So I'd love for the feds to drop interest rates, and I think they're discussing it. There are some things going on that I think are leaning towards that. Half a point cut would be great. But it really does have an impact on financing because developers in general, homeowners, have to cough up more equity to make these deals work because it's all debt service coverage driven.
Well, and it's easy, I think, for people to wrap their heads around the effective interest rates on like a real estate transaction. Like that's a pretty obvious thing where I'm sitting on a 2.5% mortgage that I got, and I'm not speaking of myself personally, but a lot of people are, right? And they got a really nice mortgage, and if they want to buy a new house, then the rate's going to be different, and it's going to affect what they can get. And that, I think most folks are easily wrap their heads around that, but the second order effects of that, I think, are a little harder to see, just in terms of like mobility and people's ability to change jobs and how that can be affected by interest rates and the extent to which people can sort of be trapped sometimes in a home, not because it's expensive, but sometimes because it's inexpensive. And I'm curious, I don't have any understanding of what that's like in the commercial real estate world, right? But I worry about it sometimes. Like I worry about folks who are in a position where they're going to have to refinance. And it's the same dynamic, right? Isn't it, in the commercial world?
It is. It's actually kind of terrifying for some of these developers.
Okay, I was afraid you were going to say that because I worry about it.
Yeah. I mean, if you did a deal, say you did a deal back in 2017 where interest rates were still pretty low and that thing is coming up for a refi, and now you're looking at, for this deal to work with a new loan at a higher interest rate, I have to maintain a certain debt service coverage. I'm going to have to come up with some cash. I got to pay it down.
Oh, and by the way, we had a pandemic in the meantime, and everybody figured out that they don't really have to go to work as much as they thought they did.
That's right.
Yeah.
That's right. And for a deal to pencil out today versus when it was originally underwritten is very challenging. So the banks are looking at some of these loans that are coming due, and they're scratching their heads going, okay, are you going to be able to pay this off? So there's a lot of scrutiny and a lot of pressure being put on these developers to say, okay, are you going to pay us off? When are you going to pay us off? And in some cases, and I experienced this myself, they're putting pressure on them to pay sooner rather than later. So that means they've got to go out and find a new loan that can help them pay off the other bank, because some of these banks are saying, I don't want this loan anymore. So that's scary.
Sounds pretty bleak, Sally.
Yeah,
okay.
Which is why I'm glad it's not my problem anymore.
All right. Well, good for Sally.
Good, yeah.
The rest of us will just keep our fingers crossed. And
Sally
hope for the best.
1, bank 0.
Well, that's wonderful. Well, here we are. I'm talking to you because you're a winner of the Charlotte Ledger 40 over 40 award. You recently retired. You're keeping yourself busy with a number of things, including your good work on behalf of the not-for-profit Fields of Hope. How do you feel about life in general and where you are?
I feel amazing. I was sitting on the beach with my husband over the weekend, and I looked out, and it was absolutely gorgeous once the hurricane kind of swept through. And it was cool, not sweating. It was like 75 degrees. And I looked over at him and I said, we are blessed to be here. We have the best of both worlds. We have our health. We have our children, our grandchildren. I can't ask for anything more.
Well, let's leave it there. On that note of gratitude from Sallie Jarosz, thank you for being together with me on the Charlotte Ledger podcast.
Thank you for having me. I appreciate it.
That's it for today. Thanks for listening. This episode was produced by Lindsay Banks. You can find out more about the Charlotte Ledger by visiting thecharlotteledger.com. This podcast episode is brought to you by Coca-Cola Consolidated, Charlotte's local bottler and the largest Coca-Cola bottler in the U.S. Coca-Cola Consolidated aims to protect the communities they refresh by reducing emissions and energy use. Learn more at coceconsolidated.com/sustainability.
QueenCityPodcastNetwork.com.